Hi, I'm Jeffery with the Jeffery Real Estate Group, and I'm here with Jeff Romansky from SecurePlan Insurance Solutions. Jeff, thanks so much for being here today.
Thank you for having me here today, Justin.
So, Jeff, do you want to kick things off and share a little bit about what you do?
Yeah, for sure. So what I do is I sell insurance. And what I sell is life insurance, disability insurance, and group benefits. And really to help others understand what their options are is really what I have a passion to do.
So we wanted to talk a little bit about life insurance specifically because a lot of the people watching, every time you go to purchase a new home, the bank is always going to offer you a mortgage insurance option.
Yes.
And not a lot of people know the difference between mortgage insurance and life insurance. So I thought it was really important that we just kind of touch on that today. Are there any advantages to purchasing an individual life insurance policy rather than a mortgage insurance?
So really the two, mortgage life insurance and a personal life insurance plan, do protect the same thing, right? They're protecting a mortgage. So if someone passes away, their mortgage is wiped out. What many people may not realize is the banks are actually restricted and they can only sell creditor insurance, which is mortgage life insurance. A bank is not allowed to refer out or sell a personal insurance plan. So when you're walking into a bank and doing a mortgage and they're asking you for mortgage life insurance, unfortunately they can't help you understand both options.
Right.
And there's many advantages to a personal plan over the plan offered from the bank.
Okay.
All right. And the one big benefit is price. Right. The credit insurance to the bank is typically more expensive than a personal plan that I can offer.
How much more expensive?
Yeah. I just ran a quote the other day, and the quote they had from the bank for a 40-year-old couple was $185 per month. Mm-hmm. And they were able to obtain coverage through me for $45 a month.
Wow.
So $500,000 coverage.
That's huge.
Yeah, it is.
At what point should someone consider getting a life insurance policy?
Yeah, the younger the better. And because when they're younger, it's less expensive.
Okay.
They won't pay as much. And health, right? As you get older, sometimes more health issues arise as you get older. And health is what buys insurance. So as soon as someone has a health issue, it may become an impact to the policy itself, and they may have to pay a higher rate, or they might not even be able to get it at all anymore. So the younger they are, the better. And typically, we try to have clients, late 20s into the 30s and early 40s is a good time to consider insurance.
Right.
And the other thing about that as well is when you get a policy, you can buy really inexpensive policies at a young age for like $5 or $10 a month if you're in your 20s, and it has options to make changes down the road to extend the duration of the coverage or to change it to a plan that might change with you down the road. So it's locking in insurability when you're young and using that past health to change that plan down the road to be, to cater to what your needs are down the road.
In the event that you needed to claim the insurance, do you need to use a life insurance policy to pay off the mortgage?
No. If you have mortgage life insurance, yes. That payout is paid directly to the bank.
And that's what you would get traditionally through the bank. Okay.
Exactly. So if you buy that creditor insurance, we'll refer to it as creditor insurance, mortgage life insurance. You buy it through the bank. And if you pass away, that life insurance plan to the bank pays off your mortgage.
Right.
And that's all it's designed to do.
Okay.
A personal plan is a bit different. You can have the intent to use that plan to pay off your mortgage, but you have freedom to choose how you want to use that money at time of death. So a lot of people might say, I don't want to pay off my mortgage. I may want to take a year off work to grieve.
Right.
I may want to take that money and pay off some of the debt we accumulated while my spouse was sick.
Yeah.
So the nice thing about a personal insurance plan is you can use that money as you choose.
Perfect. Is there anything that I haven't asked you today that you want to add?
Yeah, I think it really is just important to have that conversation. Let's face it, you said it, insurance is not sexy.
Yeah.
I deal with it every single day. And people take care of others before they take care of themselves, I find.
Yeah.
There's an old saying, the mechanic takes care of their car last.
Right.
Insurance is one of those things that I find that most people just have not put the time and energy into looking at.
Yeah.
And they're afraid sometimes of the high pressure sales tactics that some agents use.
Yeah.
And unfortunately, like any sales gig, you're going to have some agents that use very high pressure sales and usually just try and sell one product everybody they see.
Right.
So what I always say is to work with a professional that understands all product lines, not just one type of product that they try to promote to everybody, and really work with someone that can help you understand what your options are without pressuring you to buy, but more educating you on what those options are.
Yeah. Whether you go the mortgage option route or the life insurance route, there's really no right or wrong here. It's more just education and finding out what's right for you and your family. So Jeff, thank you so much for coming today. If you are interested in learning a little bit more about a life insurance policy, we're going to put Jeff's information at the end of this video. And as well, if you know of anybody looking to buy or sell real estate, we'd love to help them out. Thanks so much for tuning in and have a great day.